This video is created by Jagrat Creation. This video is useful to the students who are reading for CA-IPCC, Inter, CA-BCom and other professional courses who has this piecemeal distribution maximum loss method as a part of their syllabus. I wish to solve one sum on this chapter of piecemeal distribution, and that is going to be solved by maximum loss method. Just observe the sum on the screen, which I intend to solve here before you. Chatur, Chakor and Chalak are partners in a firm, sharing profits and losses in the ratio of 3:2:1. The balance sheet of their firm as on 31st of December 2016 was as under: capital, general reserve will be distributed in the profit sharing ratio, unsecured friends loan, creditors, both are unsecured liabilities. Fixed assets, current assets that include cash balance of 28,000. The firm was dissolved on the above date, the assets realized and the expenses incurred in the following installments. First installment, 84,000 realized, expenses incurred 7,000. So 84,000 minus 7,000 is the net cash available for distribution. Similarly, for second installment, 1,28,000 minus 5,400, that is expenses are deducted, we get the net amount available for payment of creditors as well as distribution amongst partners against their capital. Similarly, third, fourth and fifth installments are given to you. A bill receivable of 10,000 was discounted by a firm before its maturity. The bill discounted was duly met by the acceptor at the time of realization of fifth installment. From the above information, prepare a statement showing principal distribution of cash as per the maximum loss method. Now, this is basically a sum on dissolution of a partnership firm. When the partnership firm dissolves, all assets are realized. All liabilities are settled. Profit or loss on realization of asset and settlement of liability is distributed amongst partners in the ratio of their profit sharing. Now, after distributing this profit or loss, what happens? By realization profit, capital balance increases. By realization loss, capital balance redeemable decreases. And the capital balance is paid out of available cash. This is what we do in case of dissolution of a partnership firm. Here in case of maximum loss, the difference is the assets are realized gradually in installments. And after receiving every installment, you should go for distribution. Under maximum loss method, the methodology to be followed is find the available cash for distribution. Pay first of all to outsiders. So here in this, some friends loan and unsecured creditors will be paid in priority against partners loan and partners capital. Here partners loan is not there. So after making payment to the outsiders, the partners capital will be paid in an installment way. So all these installments that has been received, they are to be paid out gradually as and when they received. And that is a unique problem to be addressed in this sum. Now, so long as the outsiders are paid, outsiders are to be paid pari passu. So in proportion of their claim, they are paid. After making payment to outsiders, whatever the cash balance is available, that is to be distributed amongst partners against their capital. How to do that? For that, same philosophy of dissolution is to be followed, with one difference, that what is the claim of partners? Partners claim for their capital balance or credit balance of capital accounts. How much cash is available to us? Presume that no further cash is going to be received. So what could be the maximum loss that could occur at the time of distribution of cash? To find out that maximum loss, total capital balance payable minus available cash, that is the maximum loss. Maximum loss will be distributed amongst partners in the ratio of profit sharing. After deducting this loss from their capital balance, we will get the capital balance payable. to that extent we hold the cash, and that cash will be paid after deducting the maximum loss from the capital accounts of the partner. This is the philosophy to be followed while solving the sum by maximum loss method. When I want to prepare a piecemeal distribution statement, I will look at the liability side. How many columns should I prepare for sequential payment? I am required to prepare a column for creditors. I am required to prepare a column for friends loan. Similarly, I am required to prepare the capital columns for all the partners. This general reserve will be distributed amongst partners in the ratio of profit sharing. And for distribution of cash, I am going to prepare one column for cash. So let me start preparing all these columns. So this is the cash balance, creditors, friends loan, capital of Chatur, Chakor and Chalak. I will write down first of all the balances from the given balance sheet. Capital of Chatur, then capital of Chakor, then Chalak. General reserve will be distributed in the ratio of 3:2:1. So 12,000, 8,000 and 4,000. Distribution of 24,000 in the ratio of 3:2:1. Now, write the balance for friends loan and creditors. This is the total capital payable including general reserve. Then write the cash balance 28,000. Now, first installment, that is received 84,000 minus 7,000. This is the amount received. Now, this is the total. 28,000 plus 77,000 is the amount that has been received. So this is the total available. First of all, you should make payment to the outsiders. Who are the outsiders? Creditors and friends loan is an outsider. They are to be paid in priority from the available cash. They are to be paid in pari passu, means in proportion of their claim. So here the creditors and friends loan will be paid in the ratio of 2:1 because 72s are 140. So 2:1 is the ratio for their claim against the company. So they will be paid in proportion of their claim, first thing. Now here I am told that the bill receivable of 10,000 was discounted by a firm before maturity. The bill discounted was duly made by the acceptor at the realization of the fifth installment. Now, this is a given liability. I apprehend one contingent liability that may arise against the bill discounted in the instance if the bill is being dishonored. So there is a contingent liability, there is a probability, there is a chance, some chance that I will be required to pay 10,000 over and above this. So I should keep aside 10,000. Okay, when should I keep? It is my choice when should I keep 10,000 aside before payment made to this creditors and friends loan. But I have to keep aside before any payment is made to the partners against their capital. This contingent liability has a claim against the company. It is also a claim of a third party, but which is at present unascertained. While these creditors and friends loan are the ascertained claims, accepted claims, established claims. So there is an opinion that put aside 10,000 after making payment to these creditors, or keep it aside right now and then proceed with the payment to these creditors and friends loan. I am fine with both, but I advise at present I am going to solve the sum wherein I am going to keep 10,000 aside for contingent liability. So cash available to me for distribution between creditors and friends loan is 95,000 cash balance available for distribution to the creditors and friends loan in the ratio of 2:1. So this 95,000 paid in the ratio of 2:1. So 63,333 paid to creditors, 31,337 paid for friends loan. The amount is rounded up. So naya paisa are not recorded. Now cash balance available after distribution nil. This is the amount yet payable to creditors. There is 1,40,000 minus 63,333. This is the amount payable against friends loan. This is how this first installment is distributed. Now I get the second installment 1,26,000 minus 5,400. So 1,20,000, that is 1,20,600. From these funds, you have to pay outsiders in priority. So the total of these two numbers, I feel that it is greater than this 1,20,000. Total of these two numbers is less than this 1,20,600. So I can pay the total amount of creditors and friends loan. So let me have a total of it. That total works out to be 1,15,000. So 1,15,000 are paid to the outsiders. By that, claim of outsiders against my firm gets over. And I have got cash balance available. After that, 5,600, and these liabilities are paid out, so no balance is outstanding. Now from this 5,600, I can pay against capital. Now, out of this 5,600, whom should I pay? That I can decide by applying the principle of maximum loss method. What is to be done? Total claim of partners, total cash balance available. Difference between the two is identified as maximum loss. Maximum loss is distributed amongst partners in the ratio of profit sharing. After deducting this loss from the capital, the balance of capital available, that may be a redeemable capital. Let us see. Let me do that. So this is the capital balance of Chatur, Chakor and Chalak. Cash balance available is 5,600. Difference between these two is identified as maximum loss. This maximum loss will be distributed in the ratio of 3:2:1. So share of A is 3/6. Share of B 2/6 in this loss. Share of C to like 18,400 into 1/6. This is the share in loss. This loss will be deducted from this capital. So 1,40,000 minus 1,09,200. So capital surplus of Chatur 30,800. But if you look at Chakor, he has no surplus capital, but there is a shortage. To meet with this maximum loss, capital is short. To meet with this maximum loss, capital is 70,000. So there is a 2,800 is a shortage of capital. Similarly, to meet with the loss of 36,400, the capital of Chalak is 14,000. So his capital is also short by 22,400. Now this short capital is to be adjusted against the surplus capital. So this minus 2,800 become plus 2,800. This become, and the total of these two will be transferred to Chatur's capital account. So Chatur capital account is deducted with the total 22,400 plus 2,800, 25,200, and after deducting this adjustment, you will get amount payable to Chatur 5,600. No amount is payable to Chakor and Chalak. So this 5,600 is to be paid only to Chatur. This is what we have concluded on the basis of this note that is prepared under maximum loss method. Now, amount payable to Chatur, 1,34,400, payable to Chakor and Chalak, same, because they are not paid from this installment. Now let me proceed with the calculation for next installment. Third installment 30,000 minus 4,900, 65,100. Now, out of this 65,100, which partner should be paid what amount? How to decide? Apply the principle of maximum loss. Presume that no further installments are going to be realized. This is the only cash balance available for distribution against the capital. So the difference between the total of this capital is 65,100 will be identified as maximum loss. That loss will be distributed amongst partners in the ratio of 3:2:1. Let me do that first of all. This is the capital balance. Cash balance 65,100. 2,18,400 minus 65,100. This is the maximum loss that is distributed in the ratio of 3:2:1. Share of A in loss. Share of B in loss 2/6. Share of C in loss 1,53,300 into 1/6. This is the share of ABC in this loss. The losses to be suffered is deducted from the capital. So maximum loss deducted from the capital. Here in case of Chatur, you get a surplus capital, redeemable capital after meeting the loss 57,750. Here also you get a capital available for redemption after meeting with the loss. But here the loss is more than the capital available, so there is a shortage of capital. Now this is a capital shortage, capital deficit, the other word which I may use. But remember that this capital deficit should not be misunderstood with capital deficit that you studied in Garner versus Moore's decision. In Garner versus Moore's decision, the word capital deficit was used. Here also I get a capital deficit, but there is a basic difference. Here in this sum, Chalak is not insolvent, but when you apply for Garner versus Moore for capital deficit of any partner, that partner is presumed or is said to have been insolvent. Here Chalak is not insolvent. So though I use the word capital deficit or capital shortage, that is not at par with the meaning of the word capital deficit that you studied in Garner versus Moore's cases. Now this capital shortage is to be borne by Chatur and Chakor in their profit sharing ratio, and their profit sharing ratio is 3:2. So let me distribute this 11,550 in the ratio of 3:2 between Chatur and Chakor. I write AB, that is not fair. So here it is deducted. So this is how payment to Chatur means first partner. No payment is made to Chalak. So this is the amount outstanding for the capital. Now, fourth installment, 77,000 minus 3,500. This is the cash balance available. So difference between these two is the maximum loss. 79,800 is a maximum loss. A means first partner, B means second partner, C means third partner. So this is a share of A, B, C means first, second and third partner. And this loss is to be deducted from capital as I have explained to you. Now you will get the capital balance which is redeemable after meeting with this loss. So 83,580 minus 39,900. So balance after maximum loss. This is the balance after maximum loss. So this capital is redeemable. Its total is 73,500. So let me make a payment for these things. After making payment of this thing, last installment, that will come 35,500 minus 3,500. Now do you remember that we have put aside 10,000 rupees capped reserve for meeting with the contingent liability. And we are told that that contingent liability is now not payable because the bill accepted by the acceptor was honored. So we are not required to pay this 10,000 which we have kept aside. And now this 10,000 will be available to us for distribution at the time of fifth installment. So total amount available for distribution is 35,500 minus 3,500 plus 10,000. So if you work it out, that works out to be how much? 42,000. How I got 42,000? 35,500 minus 3,500. This is not minus but plus 10,000. So 42,000 is the fifth installment. Now here the capital is in the proportion of profit sharing. 13 2s are 26, 13 3s are 39. So capital is in the profit sharing ratio. Profit sharing ratio is 3:2:1. Capital is also in that ratio. Now if you find capital ratio and the profit sharing ratio at par, same, identical, from that state onwards, distribute all the installment in the profit sharing ratio or say capital ratio. Because every installment that you receive on realization of asset has got two elements. One capital element, second profit or loss element. Capital element is to be distributed in the capital proportion. Profit or loss element is to be distributed in profit or loss proportion. Here in this case, capital proportion, the profit and loss proportion is same. So, without preparing an iteration or calculation for distribution of this 42,000, you can straightway distribute this 42,000 in the profit sharing ratio. So, 3:2:1, 42,000 distributed. So, 21,000, 14,000 and 7,000. This is the payment made to three partners from last installment. Now, no further installments are going to be received. Dissolution is over. The amount that could not be paid to the partner is because of the realization loss. So here you will get the realization loss for 18,900, 600. So this is the realization loss. Share of Chatur, 18,900. Share of Chakor, 12,600. Share of Chalak, 6,300. Now remember, this loss is in the profit sharing ratio. Profit and loss sharing ratio is 3:2:1, and this realization loss is suffered by them in the ratio of 3:2:1. So this shows that our calculations are right. So this is a sum that I have tried to explain you by maximum loss method. I feel that you have followed all these things. Thanks to all.